Welcome to the monthly Truck Stop webinar presented by the Motor Carriers Insurance Education Foundation as a part of the Transportation Risk Specialist Educational Program. These truck stops are presented every second Thursday of each month at 2 p.m. Eastern Standard or Daylight Saving Time. These webinars will be posted on our website if you want to review them later or share them with other people in your organization or with your customers where appropriate. These are for information only. We try to bring current things to your attention as things will develop and things that will find interest. These do not qualify for state CE credit. However, the foundation does provide a series of state CE credits that we are committed to provide 12 hours a year in 3 4-hour segments. We just finished our last segment with the work comp, and we just started one last Tuesday with the employee practice liability. If you're interested in the state CE credit, then please contact the Transportation Risk Specialist at our website on the bottom or our email at the bottom, and we'll give you those opportunities for state CE credit. If you have any questions, please type them in the chat window. If there's time allowed, we will answer them during the presentation. If not, we will email you the answer. And if the question is generic enough to everybody, we'll actually neuter and take all the innocent people out of it, whereas we will share that with everybody. If for some reason you have problems in this presentation, audio problems or other, please again send us a note in the chat window or call 800-741-4084, and we'll attempt to correct those items for you. As you know, during the time frame, I try to put some programs together, and I reach out to other people. A good friend of ours out of Texas, Jim Howse, who he and I have known each other for, I guess, 25 or 30 years, has done some programs that his agencies have found useful to him discussing customer contracts. As you know, a lot of times in our discussion with you, we find out that our insured signs contracts to access work with customers and sign transportation contracts and brokerage contracts and those things, and all of a sudden what happens is we get those contracts from the insurance part of it and say, oh my gosh, what are we going to do with it? There's also additional liability imposed by contracts. So I reached out to Jim and said, Jim, how about sharing your thoughts on contracts with the audience that are listening in here today and talk about your view of them and your long-term experience. So to that end, I'll turn you over to my friend Jim Howse. You're up, brother.
Thank you, Tommy. Everybody hear me okay? I'm coming to you from LaGrange, Texas, where Saturday night ZZ Top will be playing at the Fayette County Fair. Can't wait. Okay, here's what we're going to try and review today. Contracts, which are the tools of our trade. We work with them and under them every day, all day. Contracts of insurance. We will also look at contracts truckers work with and under every day. How do we reconcile the compatibility of these two sets of contracts, especially when we've been told for years, don't give legal advice? To me, the difference is contractual coverage clarification versus legal opinions and evaluation. We don't do legal, but we must do clarification and compatibility. Okay. This all started with me several years ago when I was looking for a way to add value and to secure my place at the table by delivering more than just paper. With continuing competitive pressure on premiums, I had to deliver something most other agents did not. I decided that hinged on enhancing my relationship with my customer by enhancing the customer's relationship with their customers. The key for me has been linking the insurance contract language with the shipping contract language. The goal is to achieve common, understood terms between the two. Where that cannot be done, achieving informed business decision process. Insurance is an effective funding delivery system when words set the expectation stage. The following are a few examples of how you can add value to customer and prospects working relationships through checkpoints, issues, and solutions without going legal. You will find others as you become more aware of the checkpoints in your own practice. We are looking to create seamless language between contracts and coverage. Failing to do so creates many bad things: lost sales, claims rejection, potential E&O, loss of reputation, etc. All right, some of this will be stuff that is familiar to a lot of you, and some of it will be new. Hopefully at the end of this presentation, you'll leave with something that adds value to your relationship with your customers and their customers. One of the first things I look at when reviewing a shipping contract is, are my customers' entities in the insurance policy the same as those in the shipping contract? Entities other than insured entities may not be covered. This happens sometimes when you have a legal entity, but they have a street name that they go by and they're known as. So we want to be careful that those are the same. The same thing applies to the insured, my insured's customers. They need to have their name exactly as it is legally when they're added as additional insured or a waiver or any other thing, because insurance companies have a funny way of saying, well, we insure Ajax Trucking Company, but we don't insure ATC. So be sure that those entities are the same. Are mutual or reciprocal hold harmless indemnification clauses reported to be the same? Contract clauses reported to be mutual or reciprocal often contain dissimilar words, placing extra unburden on our insured. Compare the clauses word for word. One of the easiest way to get started is count the sentences and see what word each sentence starts with and what word it ends with. Because if those are identical, then you probably have a reciprocal agreement. Let's go here. What coverages are shown on the certificate? Do you show limits in excess of contractual limits? If you do, you may want to trim it back to just what the shipper is requiring.
Jim?
Yes, sir.
What I do in this, and you come this, is when any insured calls me up and says, I need the certificate sent to my customer, I ask them, what document do you have that says what the customer wants? And I ask them to send me a copy of that document. Now, as a part of a long-term contract, I don't want, and you have seen contracts 20 pages long or 10 pages long. All I want is exactly what you just went through here. What I ask for the customer, for my insureds, out of the contract is the 3 provisions you just went in. The preamble, the first paragraph that says who are the parties to the contract. The second paragraph I asked for is the indemnification agreements, and the third policy, the provision of the contract I asked for is the insurance requirements. And that's exactly what you went through here. When I tell the insured this, I say, insured, the reason I need those 3 is I don't want to have to do it the second time. And clearly all these contracts are different, so I want to make sure I'm sending to the right people, that I provide the right coverage for you. So if you take time to send me those 3 provisions, then we'll do it right the first time. I find that by taking extra time and asking them to do that, it helps, and that there is there's no standard in this, there's always a document, in my opinion, and you can tell me if you agree or not agree, where my client has to send a certificate of insurance to somebody to do the work with them. Something's generating that request. And so those are the 3 provisions that I ask for every time I send a certificate out from my customer. What generated it, and if it's a contract, those 3 provisions in the contract, which is exactly what you talked about here and how to match those things up.
And I agree completely. As we get a little further into this, I'm going to show you maybe a fourth consideration that needs to be involved in that. But no, that's exactly right. If you're not looking at what they're looking at, it's hard for you to deliver what their customer wants. Okay, next slide. Does contract language contain aggressive indemnity language, sole negligence, assumption of punitive consequences? Be aware of phrases like the shipper wanting your insured to be responsible for all causes of action of every kind, any and all losses, other parties' sole negligence, administrative fines, sanctions or penalty, and state-specific limitations, especially in regard to hold harmless. Make sure the customer is aware that these harsh requirements may not be covered. If they are covered, they may not be enforceable, especially, again, in the hold harmless area. If it is unavoidable to have these things taken out of the contract, especially in states with anti-indemnification laws, you just need to make your insured aware of that, and as always, in writing is the preferable way. Here's something from Tommy's white paper, and I think it's critical that everybody understand that the three controlling factors. There may be some others that modify, but the three controlling are the words in the shipper's contract, how state law looks at the contract, and if the contract is an insured contract in the definition of the auto and general liability policies.
Jim, in this minute here, first off, I'm hearing a little clicking in here. I don't know if you're clicking there, but anyway, second part of it is that you might want to explain a minute about the anti-indemnification state laws. On our website or available, we have the 4 or 5 states that have not passed one. This has been a move that the American Trucking Association and the state associations of the trucking industry have fostered, just because some of the contracts that the shippers were imposing upon the motor carrier was just so pervasive that was hard to comply with, and the state laws have been passed that prohibit some of those contracts to be enforceable under state law. One that is not prohibitive is intermodal agreements with IAUA, but that's beside the point. Other than that, basically it says is that the motor carrier cannot hold the shipper cannot require the motor carrier to hold them harmless for the motor carrier's negligence. It's against state law, and which means that when we look at the contract, as we talked about before, you have to look at what venue is going to be adjudicated under and under what state laws are going to apply. But that's a big concern here, so much so that the American Trucking Association has moved their philosophy to advise their members from try to negotiate these contracts, try to change these contracts to say, well, we got state laws, go ahead and sign them as long as they're one of these states, because they're not going to be enforceable, and quit arguing with your customer, which I thought was a 180-degree change in their attitude over the last 5 or 6 years. I don't know if you've experienced those things, but as you know, in the talks we do, we have talked about this. I even have a blog that talks about this that was about a year old, if anybody's interested in how those things work.
And I think it's an important thing to note that the policies provide coverage for those agreements, but those agreements may not be enforceable in state law. So it's kind of yes, no, but the bottom line is, in most states, they are not enforceable. Okay, and here we're talking about what is the stated jurisdiction. Whether you're going to court or whether you're going to be in binding arbitration, where does the contract state that they will be litigated? At the site of the accident, wherever that is, your home state, your customer's home state. You need to be clear. It's always better if you can have it in your home state, because that's where you live and that's where you operate under that state laws. Let me see. Does contract language require penalties for breach of contract, liquidated damages, civil fines, penalties, warranty violations, contractually assumed liability for other than bodily injury and direct property damage may be outside your coverage. Be aware of these, try and get them removed, and if you can't, be sure your customer understands why they're in there and that he's taking on personal uninsured responsibility. Next slide. Does the contract language give your insured customer the right to settle claims directly with your insurance company? This is a no-no from the beginning. It disrupts the relationship between your customer and the insurance company. I don't know an insurance company that will agree to settle claims directly with the shipper. Do you, Tommy?
No, and this is a valid point, Jim, in this area, and that is, and mainly things that we don't think about, and I was reading this, I just thought about this part. We mainly look at liability concerns, but this is a major concern in cargo, because now the shipper, particularly with the move of the last mile delivery or the just on time delivery, where if the cargo doesn't get there on time, the customer loses potential sales or potential shutdowns of the factory. Or in one case, I got involved where one of the agents had a motor carrier who was dealing with it. Jim, I don't even think it was oil well equipment, where if the drill rigs didn't get there on time, then their customer would have some penalties and would have some problems and they were trying to pass some of those penalties from delay of getting the goods at that location of time back to the insured for their loss of productivity. The conflict is that, and we don't have time here, we do have this posted in a cargo webinar that we have put on for CE purposes about the Carmack Amendment. The Carmack Amendment does not make a motor carrier liable for consequential damage for these loss of usage and this stuff. However, that can be waived by contract. And right this minute, I don't know of an insurance policy for I'm talking about cargo now, that will pay for that loss of business for the customer if the cargo doesn't get there on time. And I think that's a real gap right now between what we can purchase and what the insured is looking at sometimes for not delivering it on time. I don't know if you've experienced that, but I'm sure you can understand that concern here. The other part of it is, I know that you get requests all the time for the shipper or the broker to be additional insured on the cargo policy. Again, going back to they want to be able to access it. Again, a cargo policy is a legal liability contract, so by adding them additional insured, you're basically taking coverage away. So that's a misunderstanding in those areas, and the only reason I bring it up now is we think often of auto liability, but there is some significant coverages differences in the cargo arena.
And I see that too, Tommy, especially where the delivery of the goods to the consignee is time sensitive. If there's in the oil field or a construction and the goods are supposed to be there by a certain date, and if not, they have liquidated damages that apply to the consignee from the owner or whoever, and they want to pass those liquidated damages back to the trucker. And sometimes they're huge in the oil field business.
Or heavy equipment.
Yeah.
Yeah. I use this example. My father, most of you know, he was a trucker. He would not haul watermelons because the watermelons didn't get there on July the 3rd. They're not worth the same as July the 5th, and that's what we're talking about. They get rejected, and their client is arguing about loss of business. That's the kind of example that you have here. And as you have time-sensitive goods and or loss or just on time delivery or equipment that's going to be used to run something, that's where it is right now. And you need to talk to your agents about if your insurance is signing those contracts to see if some of those have been negotiated here. I am working with a couple of London brokers to try to come up with a product that will allow some coverage in that area. Same major thing also with auto haulers, the same kind of concept, Jim.
Yep. All right. Does the contract language give your insured's customer the right to hire the defense attorney at your customer's expense or the insurance company's expense? Once again, this is sort of like being able to negotiate with the insurance company on their claim. The attorney has to pay allegiance to. The canons require that he pay allegiance to whoever hires him. And so you don't want the conflict of interest that comes between your insured hiring the attorney, and then you've got that potential of who's the master. So defense attorneys, they're hired by your insurance company for your benefit, and you need to strike that language. Most insurance companies won't. I don't know anybody that will agree to paying for a claimant's lawyer.
I don't either.
All right. Are there clauses in the contract, the shipper's contract, requiring you to be responsible for the negligence of unrelated third parties or those tangentially associated with the customer contract? Sometimes these shippers or consignees or whoever you're contracted with, they've got all sorts of people on their yards and at their warehouses and at cross docks or whatever. There's just a lot of activity going on, and they want to make your trucker responsible when he's on the property if something else happens and another party's involved. They want to make all of these unrelated parties responsible for each other's actions, and this is a real problem because you have no control over the selection of the other third parties and their qualifications or due diligence, and neither does your insurance company.
Jim, don't you find that and maybe I haven't reviewed, and you told me that you had reviewed Texas at least anti-indemnification agreement. That's the benefit of these anti-indemnification agreements, that some of those requirements will not be enforceable.
Absolutely. And most of our insureds are making an effort to get the indemnification for the sole negligence of the shipper totally deleted from the contract. And in some cases they're able to do that, but there's still a lot of them that just, a lot of shippers that insist it's going to be in there. And
well, with the new right now, the truckers seem to have an upper hand because of just the driver shortage and the volume of loads to be hauled, that they have some more leeway in those areas, and I agree with you. But it also creates a conflict, particularly for smaller motor carriers dealing with big truckers, big shippers who have the hammer there to negotiate this technical part. We have some lawyers, if they ever get involved in it. One of the ones we use is out of Winter Haven, Florida, named Jay Taylor, who presents at our programs. He specializes in negotiating some of these kind of agreements, and if anybody runs into this and their customer and their trucker asks them how to get help, we can refer them to Jay, who gives a favorable discussion with these people because of them being members of the foundation, that will help them walk through negotiating with the customers to get some of those things removed, which takes it away from the motor carrier doing it themselves, and for him to explain how these indemnification agreements, having in there doesn't work anyway. But I totally agree with you. To get it removed is the best way to do it. You don't want to ever have to rely on the anti-indemnification statutes to say we don't have to pay.
And I will tell you something else that I'm starting to see, where the shippers or their attorneys are trying to get out of these anti-indemnification laws. We're starting to see some contracts that say we will indemnify the trucker for our sole negligence or our intentional acts or whatever after it's determined in a court of last resort. And I don't know what that effect has, but it seems to say we have a claim, we flop it over to you, ask you to indemnify us for that. It was our fault, but it's going to have to go to a trial court, it's going to then go to an appellate court, then it's going to go to the Supreme Court of the state, because then we will say, okay, you're right, we couldn't do that, but that's an expensive trip.
Yeah, you got all that defense, even though you might not have to pay.
Yeah, and that's just something new that I'm seeing is that court of last resort stuff. Be careful about professional and pollution claims. Every terminal I've ever been on in my life has had hydrocarbons spilled on it for years. The ground is saturated with them. And some of these contracts are wanting to say, if you spill fuel on our property, whether it's a retail convenience store with pumps or whether it's a storage yard and whatever, you're going to be responsible not only for your spill, but all the spills that predate you. And that's, they can tell that the tests can show all hydrocarbons have footprints. They're different in sulfur, they're different in particulates, they're different in a lot of things. But have your customer be aware that they don't want to be responsible for everybody who's slopped hydrocarbons on the ground where they're there for the first time. The scope of contract from the shipper includes past actions, activities, and exposures related to issues before or after your contract. And Tommy, this is kind of like you were talking about, they want a 2-year policy.
Yeah. I looked at one today that said we want to make sure your coverage for damage done by faulty work is for 2 years. Well, as you know, all of our contracts are on an occurrence basis, and we pay for the damages done during the policy term, meaning when the faulty work fails. So the contract I'm writing today won't pay for the damage done by faulty work 2 years from now. The insured has to keep that contract in place. Now, what I have told my clients in this area is that there's no way that can be done, but there's also no way that they can enforce that unless they're a customer that they're continuing working for. In that case, it would have the insurance in place anyway, because there's no way the customer can enforce that provision because there's no relationship anymore with that customer once it gets delivered. So that's a thing you have to look at, but that's just an impossible thing to achieve, is to take care of those kind of things, because just the contractual language being in the occurrence policy that says the injuries, the damage has to be done in the policy period, not when the work was done.
Yeah, and this is just representative of the whole methodology of this approach. You need to be familiar with the contracts so that you can identify these areas that are problematical. We're not offering solutions necessarily. We're just giving some practical hints on what you can do. These are lawyer things. You know, if it gets into negotiating what's enforceable and what's not enforceable, all we want to do is point at it and say, I think that's a problem. And then you talk about who's going to be the right person to solve it, if it can be solved. Okay. Contract language related to assumption of liability for property, care, custody, and control, cargo. We talked about this a little bit earlier, Tommy. It's a legal liability policy, and you don't need a lot of shippers and consignees and everybody else wanting to sign on as additional insured on these policies. It just, in many cases, takes away coverage. One of the things that, especially in the intermodal business, you got to be real careful, because most of these policies, I say most, a lot of them that I've seen, have language in there that says we're going to provide coverage in the course of commerce. And so if you have a container that comes into your yard and it's going to sit there for 2 days and then go out, that's probably within the course of commerce. But if it comes in and it's going to sit there for 2 weeks or a month, especially if it goes from a shipping bill rating into a warehouse, that can breach the cargo coverages. So you need to be aware of what your customer is doing in the way of storage and layover and get a definition from the insurance company when you see in the course of commerce
or
what
transit.
that means.
You'll see it also in the course of transit. Right.
Exactly. Yeah. So.
Yeah, due course of transit is how the words in a lot of the contracts will define that. Same thing you're talking about here, Jim.
Yeah. Okay. When a shipper's contract specifically identifies endorsements that they want to be evidenced on the certificate, each one of these is a tricky minefield to navigate, and so anytime there is reference to a specific endorsement, those need to be, as an agent, you tell your customer, anytime somebody asks for an endorsement, your next call is to me, because we got to find out why they want it, and we've got to talk about the implications of these endorsements and the costs. And some of them you can't get anymore. The CG 2010.
With edition date, what's the edition that they're using? 1958, is it not, or it's one of those that
yeah.
And ISO has replaced those things. It's what I find is either one or two things happen, Jim, and this drives me crazy. They hire a consultant, quote unquote, who drives all this stuff up, who tries to make themselves look better, and ask for things that just aren't relevant and or can't be provided in the terms they want to, instead of looking at the big view of what they're trying to achieve. That's these consultants who have nothing about insurance. One of the things that when I talk to shippers or to customers here, and we have the lawyers like Jay Taylor, who are Rob Mosley and Greg Fury, and the people we use in this arena to talk to their customers about this, is that, look, requiring all these things, you're limiting your source of people who you're going to use, because and you're restricting that. And what are you trying to achieve with these endorsements in this area? One of the things that is unique in the situation for a trucker that isn't relevant in some of these contracts, and when you look at these endorsements, some of them cover ongoing activities and some of them cover products and fleet operation as well as ongoing. Well, the trucker really doesn't have a product and fleet operation exposure if all they're doing is providing transportation. So, why go to that extent when that exposure is not even there, other than as a checklist that somebody who's a consultant or a lawyer that want to help them draft these things. So, again, it drives me crazy when they're asked for more than is needed or can be even achieved, Jim. I don't know if you run into those things.
I do, and I'll tell you, this is kind of the foundation of this whole presentation. You get these consultants and attorneys who say to their customers, we're going to tie this trucker up. He won't be able to spit that we can't control what happens after that. And if they do these things and they separate the insurance language from the contract language, so that, and this is the discussion you have with your shipper. If you do this, and there's not seamless transition from the language used in the contract to the language used in the insurance policy, you get an uncovered loss. Now, which pocket as a shipper, as a claimant, do you want to go to for recovery? Do you want to go to AIG or National Interstate or some of these other billion-dollar companies, or do you want to go to your 75 power unit trucker? I mean,
or 10 power unit trucker, or even worse, because there's no assets there.
Yeah, and so think about how the insurance is designed to fund legitimate claims, and don't throw words in there that destroy that seamless relationship. And I think that's what you're doing here. With this whole process, you're going through and looking at these contracts and trying to mitigate the damage done by aggressive, uninsured language to create the awareness that the shipper needs to be dealing with an insurance company and an insured loss. That's where the recovery is, and not to tie up some, like you said, 10, 25, 30 power unit, or even a 500 power unit. You don't want, none of them are as big as these insurance companies, don't have the assets.
Jim, you know more about this than I do because you deal with it more on a daily basis. Outside the oil industry, and I've dealt with the oil people. I've had a client who worked in the oil patch, so I've dealt with those guys, and they're very pervasive. But let's take it away from that entity, that industry, to the common shipper. I find that a lot of the larger common shippers understand this, and I see a lot of times they don't build those things in because they've gotten that message. They understand that. When I found out some of these smaller shippers, though, rely on somebody who doesn't know this or copy something that was useful 3 years ago or 8 years ago, from policies have changed since then, and then are animate about it. And when I talk to them, when I'm trying to enforce on these people is, look, you're limiting who you can use. And that you just said, what are you trying to achieve with this? Anti-identification agreements, what are you trying to achieve? Keep your insurance out of it, leave it there excess for you. You know, what's the trucker going to pay for? Because they're going to pay for their damages, and you're already insured for you being held vicariously liable. So how far beyond that do you want? And if you ask for too many things, then you're going to limit who you're going to be able to do business with, which is going to make is the additional cost of limiting who you can do business with worth trying to have all this stuff jump through the hoops. And so it's exactly what you're saying. But again, a lot of smaller truckers either do not have the sophistication nor the gumption, and because they're dealing with their shipper who gives them business, and they don't understand, well, what you mean you can't do that, insurance agent or insurance company? And so that's the conflict. This is why discussions like we have here today are very relevant to help them, because I agree totally with you. They rely on us, the insurance industry, to walk through these things. Most of them don't have an attorney to help them, and they say, why can't you do it?
And we're not going to get legal. We're not going to tell them how to make legal solutions. We're just going to point to problems and be sure they have a firm understanding. Another thing that happens is you talk to a shipper and he says, well, just tell your insured thanks, but no thanks. We got dozens of guys waiting in line to sign these agreements. And my offer
today, that's not true.
Yeah, but my offer to them is, who do you want to do business with? A trucker that willy-nilly signs anything you put in front of him, because that may be an indication of how he buys his insurance, what kind of coverage he buys. Or do you want to do business with a trucker that's got his head in the game? He's questioning things. He's offering solutions, trying to help you stay out of his pocket and in the insurance company's pocket. So it's also a question of the quality of the business management of somebody that will just willy-nilly sign anything you put in front of him.
Well, you also hear this saying, well, we know of a dozen insurance companies will do that. I've also found that wrong.
It's absolutely wrong.
For the size of risk that we're dealing with. Now, clearly, the bigger ones with a lot of assumption of risk, maybe, but the smaller, no. It just doesn't happen.
Well, and they'll say, well, I got certificates that say it will. And yeah. I said, well, the next thing I'd want to know, does that agent have a good E&O policy?
Yeah.
Because if he's going to certify anything, he's got trouble. All right, let's see here. Another note from Tommy, beware of the endorsements that limit contractual liability, and you just have to look at each one of them.
These two, the problem we have with this, Jim, is that in all the general liability policy and auto policies written currently by ISO, and everyone that I have seen that has been modified, ISO modification, contain exclusive contractual except for insured contract. And the insured contract F in the GL liability policy and contract 5 in the business auto motor carriers form gives broad form contractual in there. there's no insurance company that I'm aware of today in auto liability that has a contractual exclusion or a modification of the contract in their policy. So I'm not aware of that. But the general liability policies does have two endorsements that can take that broad form contractual, that provision F, out of the GL policy, and or has a modification with this CG 2407 with addition date of July 7th, is that modifies it where all the provision F is going to apply is to identify them when they're held vicariously liable for the actions of our insured, not when your insured assumes the negligence of the customer. Now again, that's anti-identification. My point here is the smaller motor carriers are buying a policy that might be more restrictive, and in those policies what I recommend for both the retail agent and when we deal with insured is to check to see if those endorsements are added to their policies, and if so, talk to them about it, because that is a natural conflict between them holding their customer harmless. Again, I don't worry about it as much because of the anti-identification, but those are two endorsements that we'll find, particularly for smaller motor carriers and particularly for policies that have been written on the non-admitted marketplace.
Well, if I'm remembering right, the contractual in the automobile policy is broad form, but the contractual in the GL says it's a condition of that the insured has to be at least partially at fault. So
no, the provision F allows to be an insured contract when the insured assumes the tort liability of a third party.
Okay.
The additional insured endorsements do require them to be vicariously liable in it, but the auto liability policy provision 5, insured contracts, and the GL policy exclusion definition of insured contract F, both of them include the broad form wording. The wording is exactly the same in both. The difference I'm bringing here is that there's no ISO contractual limitation endorsement to add to the auto policy. There is two to be added to the GL.
This is something we've just seen recently, that some of the contracts are now asking that the customer's insurance company is added as an additional insured and waiver of subrogation to the trucker's policy. It's just so recently that I've run across this that what does that mean? Does that mean they want the truckers' policies to be reinsuring the shippers' policies?
Yeah, I don't know why you would ever add it. I understand waiver subrogation. That's common, but I don't know why you would ever add the insurance company of the customers as additional insured to our policy. But even then, the additional insured agreements only add as vicarious liability, and and their policy would be excess. I don't know where that would be involved in it, Jim.
Well, I think we've got an attorney or a consultant that's trying to earn his fees.
Overthought something. I haven't seen this provision, but go ahead.
Standard notice of cancellation in customer contract and insurance policies. I have always tried to get as much notice of cancellation as I can, because the triggers for notice of cancellation typically have remedies. And I'm talking about whether it's an insurance policy or a shipper contract. And if you've got, of course, non-payment, that's a different deal. It's either 10 or 20 or 31, or depending on the MCS 90 and other things that you have. But if there is an error that comes to the attention of the shipper that violates the contract and he's going to cancel it, you want to have him have 60 days notice in there, and you want your insurance company to have 60 days, because you want the room to fix what's wrong. If somebody's got a grievance that's worthy of canceling the contract or the insurance policy, and you have a 30-day notice of cancellation, that may not give you the room that you need to remedy it and then turn around and remarket it. So I'm a big fan of getting as much as you can in the way of notice cancellation. Another point from Tommy that there's conflicts between the notice of cancellation insurance policies, customer contract, MCS 90, and state laws. So you need to, when you're looking at a customer contract, you need to be aware of each of these can, even as far as non-payment can affect the notice of cancellation. Do you have anything to add to that, Tommy?
No, I agree with you, and even particularly there's some policies, even if they've been in force over 60 or 90 days, you can't cancel for any reason except for non-payment. So, but then you promise some notification for the customer. As you know, Accord's language changed about 4 years ago, where it said we'll endeavor to send you X days. Now the language in the typical Accord form says that we will send you notice based on the insurance contract itself. Now, as a part of the insurance contract, if it's auto liability, I interpret the MCS 90 endorsement to the policy to modify the policy, which does require 36 days notice of cancellation of the endorsement, therefore the policy. So the notice at least of 30 days would be met with MCS 90 endorsement, and that would even be for any reason, including non-payment. That would not be true for jail liability and other areas. Most work comp policies require 30 days notice. So the 30 days notice is not a hang-up for most of the policies that we write, again, with MCS 90 attached or work comp. There could be a problem with GL because GL will allow it to be canceled for non-payment short of those, where those two other policies do not.
And this usually can be accommodated by the insurance company and the MCS 90. They just need to get a little more down payment.
That's what I say. You just got to get another month's worth of down payment. That's the way you stop it. You say, if I got to send it, then I got to have another, I got to have 20 or 25% down. Exactly. Yeah. That's the way you. Yeah. That's the way you resolve it. If I can get it, then who cares? I mean, then then we'll let them have that notice. It's a matter of dollars.
This goes back to where you were talking about the 3 things that you ask from a customer before you deal with certificates and stuff like that. I'm finding that the 3 sections you're talking about are not necessarily where all of the indemnity and hold harmless language is concerned. There may be a section that deals with equal opportunity, or deals with wage and hour, or deals with any of these kinds of things, and the shipper wants you to indemnify them. Pollution is often in a separate section. And so as an agent, you need to be aware of the fact that those 3 are going to contain 90% of the issues you're going to deal with. But you need to scan the rest of the contract and apply these same sort of recognitions and tests to those too, because they'll hide stuff from you. Waive right of subrogation. In most of the contracts I'm aware of, you can waive the right of subrogation as long as it's in a insured contract, and it's requiring that.
But as long as before the event.
Yes, before the event, and it meets the criteria of an insured contract, and it's a covered event. And I'm not sure how to think this through, because this is just something I've added within the last couple of weeks. If you have a blanket waiver of subrogation and you have an insured loss, then that's within there. But suppose you have an uninsured loss, and you pay it yourself, and then you want to go back to the tortfeasor, or you want to go to the person that caused the problem. I'm guessing if it's a shipper, you're not going to have much luck, because that waiver applies not only to insured losses but to all losses.
You're right.
But if there's somebody in the shipper's contract that says, we want you to do this with every vendor that's on our yard at that time, or we want you to do this. Is there, and this is a question, is there a way that a trucker can preserve the right of subrogation against those kinds of peripheral entities that may have caused the loss? I don't know.
Well, the only way you could do that, in my opinion, Jim, is modify the waiver of subrogation where you do not have a waiver of subrogation. You would just have to have a waiver of the insurance company's subrogation.
Yeah.
Limit to insurance companies, not to the motor carrier.
Yeah, it's just I'm trying to find a way that I can protect my customer from those things which he gets obligated to do, which he has no knowledge that the fact that an uninsured loss, he needs to keep that so he can recover if he wants to. So anyway, that's a work in progress. Signing customer contracts, nobody should sign the contract without signing it with their title, their corporate title. They need to be an authorized representative. I personally have been involved in a situation where my signature was on a contract. It didn't have to do with trucking, but I didn't sign it James J. Howse, president. I signed it James J. Howse, and they came back after me personally because they said you signed it in your personal capacity. Also, shipping receipts and other subsequent documents can contain troublesome language. You know, every shipping document I've ever seen, you turn it over on the back and it's got a lot of words.
There's a point here that Scott Light, when we teach the advanced underwriting, brings to the participants in that, is that his recommendation is for a letter to be sent by the motor carrier to all customers to say that the driver does not have the right to sign any contract other than the notice of receipt of the items on behalf of the motor carrier, that to limit what the driver can change the contract. All they can sign is for the receipt of the items here, and that takes some of that away. But because I agree with you, the driver signs it, they have apparent right to do that, and they could come back and have a problem with those modifications. And I agree with you, at that point there is some modification on individual bill of ladings.
Yeah. Let's see here. To the agents, be an advocate for seamless language in both contracts and insurance policies, and this is sort of the foundation I was talking about. Talk to the shipper or coach your customer on your trucker on how to do it. That we're not arguing with the shipper. We're not saying, you know, dadgummit, strike this out. We're not being hostile. We're saying we're trying to, you know, it's like what was the movie? It says, help me help you, so that we get as much as we can the seamless language between the two contracts. It's to everybody's best interest. And then that's what this slide says, is it's about deep pockets and negotiating with shippers.
I think you make a good point, and I think the thing that with the, and it's almost to the point, Jim, with, and again, I'm talking about today's economy where there are more loads to be hauled than truckers to haul the load. Most truckers that I know of, this is the best time they've had in a long time because they can stand up to the shippers because there's no alternatives there. And if some of these shippers are so pervasive, there might be some of them that you use the old song, instead of, you know, hold or fold. Maybe some of them you need to fold and go find a customer who can be cooperative here. And the point that you made here through this whole presentation is, shipper, we're not trying to get rid of our liability of when we cause a problem for you. We're willing to do all that. It's all this other stuff that we have that's not relevant in the typical hauling agreement we have with you that we can insure. And so we're now in the conflict to try to find insurance on something that's not even relevant in the contracts that we're hauling with you, that's not enforceable in the contracts hauling you. So it's limiting our insurance carriers, which if we can't get our carriers to do it, then we can't do business with you. And now so you got to decide which is better to do. Make sure that you're protected as best you can with our policies, and when we can't, protect yourself with your own policy, or not do business with us, or get a certificate you mentioned earlier, Jim, that's not accurate in what coverage is being provided because the agent doesn't understand it and they just send it out.
And I agree. In addition to and this was, I should have had this in here and I didn't, but I just referenced it. We were also seeing contracts that have in the language that this contract supersedes any contract that we've had with you in the past, and the terms of this contract will apply to any work that you do for us in the future, regardless. So you got to be kind of careful that you have maybe one contract that your San Antonio terminal is working with, and you got another contract that your Oklahoma City terminal is working with, and they may not be the same.
Yeah, they're the same shippers, right? I mean, same customers. Yeah. Same customer, right? Same shipper.
Yeah. And so that's you just need to be aware of that. You need to have one standard of behavior documented with each shipper, with each customer. So is that the end of it, I'm thinking?
Thank you, Jim.
Nope.
I appreciate you putting this presentation together. It's very useful. It's very important. I've had situations, and I'm sure you have, where we we provide an insurance to a trucker, and then the next thing that we know, they can't get on their location because we haven't provided the right certificates to do that. Yeah. When a trucker buys a policy, they're worried about getting them legal, meaning meeting the government requirements. But the first use of any insurance policy beyond meeting the government requirements to operate is to get on the premises of their customers to pick up loads. And a lot of times we ignore that part of it. And a lot of times the insurance carriers we have here don't even understand their same writing. So what we have here through the Transportation Risk Specialist webpage, I've written a white paper that's 15, 20 pages that address the question about primary, waiver, non-contributory, all those kind of things for all policies, auto liability, general liability, the additional insured provisions, the waiver or comp, cargo, and then later even excess part of here, that if they take time, if this comes up, you go to the White Papers tab in the Transportation Risk website, look for Customers' Request for Protection, and you can download that, and it explains how to take care of the typical contracts they have, Jim, not the stuff you talked about that's out of the norm, but I'm talking about the typical contracts that ask for additional insured, waiver subrogation, primary, non-contributory, the standard wording, and how our policies word that. One teaser I do here is that requirement of being indemnification of broad form contractual, additional insured, waiver subrogation, primary, and non-contributory is built into the auto liability policies that are ISO auto liability policies without any endorsements. And a lot of insurance carriers don't even understand it, and that's what we try to spell out here for their uses if they want to download this. But Jim, I really appreciate your time and effort in this area, and thank you for this. Just for a preview for the next month, our next webinar is October the 8th, at 2 p.m. on October 8, 2015. Here we're going to talk about cargo coverage for cattle haulers. That's a special area. I know a lot of you might not be interested in this, but there's some unique things about dealing with this unique area, and we have a friend of ours who's going to talk through the problems with cargo with the cattle haulers and the different type of coverages you might have. For that, we welcome these webinars are open to all members of the Motor Carriers Insurance Education Foundation and the TRSR members only. We hope you gain something out of spending this hour with us, and for that, we'll see you next month. And again, Jim, my friend, thank you for your time. We're out of here.
Yes, sir. My pleasure. Adios.